What's up, good people? This is Cole from the Free Trading Academy. We're back today and we are talking my two favorite candlestick patterns that I love to trade. And when I say trade, I'm not talking about as soon as I see these on the chart, I'm getting in the market. I've heard teachers teach that. Some people, they want to simplify trading so much to where it's as easy as just trade as soon as you see this formation, and it's not that easy. I'm trying to tell you guys, don't do that. Okay. What I'm talking about here, everything that I'm teaching you is just layer upon layer upon layer of what you've already learned, so that you use this alongside supply and demand, channels, Fibonacci, whatever it is. You want to put it all together. All right. So I just want to offer that disclaimer first before we get in here. All right. This isn't the end all be all here. A lot of people want the easy way out, and that's just not it. All right. The only two that I really look out for, just because that they work well with the strategy that I trade with. The first is the pin bar. Sometimes that is also referred to as the hammer. The second is the engulfing pattern. Both of these are very easy to spot. They really stick out on your chart. And when you see them form in the correct place on your chart, then that could be a signal for a really good entry. So first, some characteristics. The pin bar has a small body with a long tail or shadow. So the tail should be significantly longer than the body of the candle. I'm going to point out a couple. You should trade in the opposite direction of the tail. Okay, so even if the candle itself is red, so this one, for example, is a really good one. This long red candle here. Sorry, one right next to it. There you go. So we see that have a long tail at the very top. You have the body of the candle. All right. So even though the candle itself is red, it closed bearish. This tail indicates that there's a lot of buying power in the market. So the reason why this is so important to use with supply and demand is we see that this is forming in a demand zone. Okay. A supply zone that, will eventually become demand. So it's forming in a zone of interest. We know that it's been broken. All right. It's been broken to the downside. We have price coming back in here. We know that if we drag it out a little bit more, it was a demand zone. Price really ran out of here. So this area is an area of interest. We know that there's a lot going on here. So we're paying close attention to the candlestick pattern. So for me, I see that price made a second push down. All right. We get a bullish engulfing, which I'm going to cover in a second. And then we get this formation. So this is just really indicating that the sellers have tried to make one last push down. They got rejected. And then now we're just waiting for price to push back up. This is a pretty recent chart. This is today's price action on GBP USD. All right. So like I said, this is only valid near supply and demand zones. And for me, I really only draw my zones on the 1 hour, 4 hour, and daily time frame. Anything else, I mean, you could trade it, but trade at your own risk, because the lower the time frame you go, the less solid the zones are, the less solid these candlesticks are. It's just a lot more noise. All right. So that's the pin bar. The second is the engulfing. You have your bullish and bearish engulfing candle. All right. So I pointed this one out earlier. This is a bullish engulfing. So characteristics of an engulfing candle. It's a two candle, formation. So you need your first one. All right. And then you have your second one. The second candle's body, open and close, should completely engulf the first candle. Okay. This indicates heavy momentum, and a reversal is about to occur. Could occur, not about to, because that's not absolute 100% of the time, or a continuation in the trend. So I like to trade these in both scenarios. So here, as you could see, all right, the low of this candle is way, here's the low of the first candle. Low of the bullish engulfing is way down here. All right, you have the high way up here and the close. So this completely engulfs this first candle. This is probably like as classic of an example as you could get. And then as you see, price shoots up out of here. So again, we don't just trade these blindly. We know that this is a demand zone that hasn't been tested yet. Price makes its way back down. We see some rejection here. Then we finally get this engulfing, and then price takes off. Okay. These are the only times you'd want to trade these formations. Okay. Because anytime else, it's really just noise on your chart. So for example, right here, this is a good example of when not to trade. All right. We're just going to pick some stuff out, whatever we could find. Good example not to trade. All right. So this looks like a lot of selling pressure right here, right? You have a bearish pin bar, even though just like this one, it was technically a bullish pin bar, but it closed bearish. This is a bearish pin bar, but it closed bullish. All right. So our rule of thumb is we would want to take this trade in the opposite direction of the tail. So you want to take it down. All right. But the very next candle is a momentum candle. This technically doesn't engulf, although it does look like an engulfing. So I just call these momentum candles. Very strong buyer pressure, and it takes price back up. All right. So if this candle isn't forming near a major area of supply and demand, or some other type of support and resistance that you've mapped out in your chart, then it really is useless. All right. It really is useless. So you have another pseudo engulfing candle right here. This is more of a momentum because it doesn't completely engulf the first one. But you see, it looks like a lot of sellers are entering into the market, but really all it is a correction. All right. That's all it is. Price is making its way up. Okay. Let's see what else we could find here. All right. Bear with me. Okay. I would consider this bullish engulfing here. All right. Again, depending on what you have on your chart, you may or may not take that trade. But this is a good example here of just the pattern itself. So you have this bullish candle that completely engulfs the bearish one here. And then price, in this case, does go up to the upside. All right. Okay. This right here is a good example, mid-trend of a bullish pin bar. All right. So price has bottomed out down here. We've seen prices now making its way up. It's broken this area, which looked like it was kind of temporary resistance. Price broke through here, made a little retrace, and then the sellers got rejected. Okay, so I like this setup a lot. All right, because we know we've already kind of had our indecision down here. A lot of traders would try and get in. Everybody wants to post a nice trade where they got in at the very bottom. So a lot of traders get in here, but they end up getting stopped out because price is just real choppy. Buyers and sellers exchanging hands. So once price breaks through this area, now we're looking for the pullback, and we're looking for some sort of rejection to tell us that the uptrend is going to continue. So this is a very good example of how you would want to enter on that rejection, and then you have yourself a nice trade here, nice good profit. So last example, let's see if we could find a trend continuation. So this right here, definitely a bearish, engulfing. All right, so we have a retrace, as price always does. Price is going to correct itself. It's never just going to go one way forever. So we have a little bit of retrace. Price tries to catch its breath a little bit. And then we have this candle that just completely lets everybody know that the trend is still valid. All right, and then continues down. So if you get in late, if you're a very conservative trader, and you're like, hey, I like to wait for the break of structure. I like to wait for the retest, maybe second retest, just to be sure. And you want to wait until the trend is firmly established. Engulfing candles will be your ticket to entry. Once you see these happen mid-trend, then that's a good key to get in. Here's another one right here. All right. Not quite engulfing, but definitely heavy momentum. All right. These will tell you when the trend is continuing, and then you could go ahead and continue on. And then lastly, here's one more. I just saw it. Where'd it go? Right here. All right. Another bearish engulfing to let us know that this little correction move, whatever this is over, and price is going to continue on downward. So these are the two that I love to trade. Again, do not trade these blindly. If you just see them on your chart and they're not occurring near a major area of supply or demand, then they're useless. Don't trade them. All right. So pin bar, engulfing, go back and back test. See if you could find these on your chart. See how reliable they are, especially when they are occurring near an area of interest. Okay. Happy trading. Take care. Stay locked into the next video. Peace.